it going? How's it going? How you guys doing today? Been having some fun over here, just doing some analysis. And we're about an hour away, I guess, from FOMC, the rate release. It's coming at 2 o'clock, if I'm not mistaken. Yeah, 2 o'clock. So, whoop-de-doo, they're going to increase rates. I mean, that's no surprise to anybody, right? I mean, they've been talking about this for quite some time, so why shouldn't they just go ahead and do it? So, what's going to be the reaction? That's the question. Now, as far as I see it, for me to determine what the reaction is going to be, I first have to know what they've been setting up. And what they've been setting up is a weak dollar. So they're setting up a weak dollar. Like, they're advertising that the dollar is going to be stronger. And we've talked about this, the news articles and stuff like that. There was a couple news articles that came out recently. And we can take a look at those. I'll bring it up here. Where is it? Like this one. Dollar rally gains steam amid fears. This was when did this come out? This came out on the 18th. Okay, just last week on Monday. All right, and after this came out, this article, that's when they started taking profits on their long positions on gold. So that's been the theme, okay? But, you know, this data that's going to come out is going to be driven by short-term direction. So when we think about what the short-term direction has been, it's recently been upwards, okay? After the initial drop. But remember the context in which this has happened. This dropped from the highs here, okay? From profit taking. That's why it dropped. Now it's slowly retracing upwards. But how long is this retracement going to last? Who knows? We do have an institutional area of selling here. So could the banks come in and just push price down here from FOMC? Yeah, it's possible. It's possible. Okay. The other option is that we see price rally up into the area of supply up here, and then we see price drop. Overall, the theme is a drop in price because the media is setting up for bullishness, which means the opposite is going to happen. They're trying to get people to get bullish the dollar because as they're buying the dollar, the banks are offloading their positions. So that's what I'm thinking. Okay, I don't have a crystal ball to know exactly what's going to happen. All I know is what has been happening, what is the news trying to suggest, and based on that and the short-term direction and the supply and demand dynamics on the charts, this is what I see taking place. All right. Any questions on that? Does that make sense to you guys? What do you guys think? Makes sense, right? All right. So that's what I see with the dollar. And as you can see, the euro setting up quite nicely here on the daily chart for a drop. You see how it rallied up, removed demand, starts coming down to the area of demand there. Yeah. So that indicates to me that we're probably going to get weakness in the euro, strength in the dollar, right down into this area of demand. And then when everybody's selling the euros, the banks will offload the rest of those long positions that they had that we located on the CFTC. And then we'll see a reversal to the upside. Okay. That's what the charts are suggesting. It could play out a little bit differently, but the odds are that is how things are going to play out. In terms of gold, there's not much going on with gold. This is just higher time frame is playing out right now, and it's consolidation time. So it could stay sideways here for another week or two if it wants to. And same thing with oil. It's not time to be focusing attention on oil. But did you see here, I was looking at NatGAS. Did you guys see what I was pointing out here? Okay, there's weakness here. We had the very strong rally, very strong rally from this area of institutional buying that we located on the weekly chart. You see that? That was a nice area of institutional buying. All right. And so it rallied up quite nicely from $5.70 all the way above $9. And so now we're seeing it pause and we're seeing it drop. Why is it dropping? Well, could be many different factors. I tend to think it's because when you go to the ETF and you look at the United States Natural Gas Fund, it's hitting institutional supply. Okay. Let me go back to my other chart here. Okay, NatGas right here. It's hitting institutional supply. So now there's going to be pressure to the downside on this. Okay? So that's what's taking place. It's just the supply and demand dynamics kicking in here. You see what's going on here? Look. Okay? So likely we do that. How far down? Hard to say. We're already starting to come to close contact with this initial daily area of demand. If that breaks through, then yeah, we could get a move to the downside like that. Okay, so I'm watching that. Bunch of stocks I'm watching. Google earnings came out. We got a push to the upside. Yeah, well, no surprise there. We have institutional demand that's in play. When institutional demand's in play, regardless of the earnings, regardless of anything, institutional demand is in play. So guess what happens? Price rallies. And interesting, because earnings was negative. So, you know, your typical investor traders looking at this and they're like, well, that doesn't make much sense. You know, negative earnings and yet price rallied. Well, the news will explain it in so many different ways, but the bottom line is that this is what's going on. All right. This is what's going on. Institutional demand is in play. And this is a similar dynamic as to what we have with the NASDAQ. Okay, we've been looking at the markets for some time, and the NASDAQ has institutional demand in play. SPY doesn't, the Dow Jones doesn't, but the NASDAQ does. And this is what we're seeing from the bullish pressure in a lot of stocks today. Okay, we take a look at FinViz, and you can see that the heat map is mostly green for the day today. Okay, and this is institutional demand on the higher time frame charts coming into play. This is why we're seeing the increase. So if you're watching the news and they're telling you that earnings, you know, has been somewhat mixed or positive or whatever spin that they put on to show, you know, look at the earnings releases and look at the bullish pressure in all the stocks, the explanation is what I just told you. Okay, it's not what they're telling you. It's what I'm telling you. Okay. Makes sense? Any questions with regards to that? Need any clarification? I think it's pretty straightforward. We've covered this quite often. We had Microsoft, right? MSFT come out with earnings. And again, negative, but a rally in price. Okay? Why? Look at the monthly chart. You see that green area, that green rectangle? I didn't draw that for fun. After doing extensive analysis, this is the area that I located of the banks buying. Okay? So the banks are buying there. There's buying pressure. So could this rally up even further? Yeah, it could. Yeah, for sure it could. Okay, but there are areas of supply higher up on the chart as well. So we should be aware of that. So Microsoft, that was yesterday. Let's take a look. Meta Platforms coming after market close. And so let's take a look at that chart. Okay, we have institutional demand in play as well on this chart. Okay, so what do you suspect will happen? Okay, we'll likely see a push to the upside. Likely, you know, likely. So, and then they will explain it in whatever ways they want to, but what's likely going to happen is we're going to see a push to the upside on Facebook. So so that's about it. There's some other ones coming out. But the charts that I'm really focused on are here. Okay, S&P, Dow Jones, NASDAQ. These are the ones that I'm focused on for the time being. The SPY suggests that there's more upside coming. The NASDAQ suggests more upside coming. And look, we've been seeing the bullish pressure here. Dow Jones, we have institutional supply in play. That's why we're seeing some weakness. But definitely more upside can take place. And Russell 2000, definitely more upside can take place. So overall, the consensus is the markets are going to likely rally over the short, medium term, but then we're going to see a drop. And that's what I was pointing out in that video yesterday. I don't know if you guys had a chance to see it, but this video here, let me just play it for you in case you didn't get a chance to see it. Where is it? Let me see here if I can get.
So one thing we also had said is you should expect some face ripping rallies. What we're seeing right now. Where we may get that sell-off is once we get through the FOMC, and once we get through earnings, the macro is going to take over. And as you pointed out earlier on your show, the macro is not so great at this point in time. The other thing that occurs is liquidity starts to come out of the system, and we could see some sort of sell-off in August or September, basically because people start worrying about the recession, people start worrying about financial conditions, and we don't have a lot of idiosyncratic information or stock-specific information because we got all that during earnings season.
So I would tend to agree with what he said there about the rally and then a soul-crushing drop. But then,
where is the bottom? Where is that?
He says this.
Into the market.
Yeah, so we think the bottom on the S&P is somewhere around 3,700.
3,700, I think that's ridiculous. Okay? I don't understand how you can say soul-crushing drop and then 3,700. 3,600 is like where we were. All right? That's the lows of where we were. And when we're looking at the markets, they just removed a significant institutional buying area. Okay? So why did they remove this significant buying area? I don't think they removed the significant buying area just to rally price up again. That's not how I'm seeing the charts. I mean, could it happen? Sure. And there will be indications on the charts when that does happen. But that has not happened yet. Those indications are not there. That price is going to, over the longer term, head higher. But to say that $3,600 is the lowest, I don't see that. Okay, and that's what this guy's saying.
That's close to where we touched before. I think we got to 36 and change. So maybe we get close to retesting the lows. But
yeah,
at the end of the day,
I don't think so.
And you also hit on it before. We're getting toward, or I think we're getting toward the end.
Yeah, I agree with you, Mo.
Cycle.
Not going to happen. I'm sorry. Doesn't look good. So yeah, so that's what I've been basically seeing here on the charts. So it's you know, I'm looking to get into some serious positions short with the stock market, but it's like I'm just waiting for that ideal moment when the market has finished its rally and it's ready for that soul-crushing drop, because I believe the soul-crushing drop is coming. I do think it's coming. If I was to say when, can I say August? I don't know if it's going to be August. I mean, where are we now? We're at the end of July. So I would say, you know, since I think medium term, which is multiple days, multiple weeks, the momentum will be to the upside. It could be multiple weeks, right? So we can go into September. So the later portion of this year is when I think that soul-crushing drop is going to take place. That's what I think. Okay, so I think now is the setup, because as we've seen, you know, when price was near the lows, we saw a lot of bearish articles coming out. Do you remember that? I was pointing that out, a lot of bearish articles. So that led people to suspect that, hey, this is going to continue dropping. And now we're getting that push to the upside. Okay, and now what I'm starting to see up here at these highs is bullish market articles. Well, that's quite interesting, right? Why are bullish market articles coming out? Well, yeah, it's too late now to be bullish. You should have been bullish down here if you were going to be bullish. All right. Now the move is taking place. And so can it continue? Yes, I'm suspecting it will. But the fact that they're luring people in to getting bullish the market right now, wowzers, you got to be very careful. Okay. And members know this because, you know, let's take a look here at institutional positions on the S&P. Okay. We went into this in much depth with members this past weekend. Look what the institutions are doing with their short positions. Do you see what they're doing? You see long positions? What's going on here? Long positions are extremely cooled off now. Okay? Extremely cooled off. July 19th, they recorded 50,000. Their average was 62. So they're well below average on long positions. Okay? Meanwhile, look at long positions, short positions, short positions, 91,000. What's their average? 68. They're well above their average size for short positions. So as the banks are preparing and entering into massive short positions, they're now starting to come out with bullish articles regarding the market. Okay? So this is what I'm talking about. So be careful, because everything is suggesting that this is a big setup for a big drop. This is what I'm seeing. So just be aware of that, because, you know, short-term longs, you know, I wouldn't personally want to be short-term long or even medium-term long the markets right now, because this can play out in, you know, many different ways, and time's going to pass, and price can drop here, and it could do a lot of different things until it gets to those highs that I suspect are coming. But you know, I believe that, you know, more upside is going to come, and then that soul crushing drop is going to come. I mean, everything is pointing in that direction. I can't know 150% that something's going to happen, but everything is pointing in that direction. The media articles, the technical analysis, the positions held by the banks, all three, okay? The Trinity, the Trinity is all coming together and all pointing in the exact same direction, that a big drop is coming. All right. Ram asks, how far do you think it can drop? Well, I think it can drop. I think it's probably about 50% from the highs. I think it's about 50% done. So basically another 50%. Okay, give or take. But that's kind of where I'm at. Just another 50% or so. All right. Martin, this guy is saying no worries to keep everybody in the markets. Yeah, I guess you could interpret it that way, right? Right. So listen, if you're saying that there's going to be a drop, but the lows are 36, let me just ask you a question. When price does this and comes down there, what would you be doing if you believed him? If you believe that these were the lows, what would you be doing? Remember, you're buying now because the articles are telling you to buy, right? So when it gets up here, you're probably going to buy too, because there's going to be more articles. And by the time price gets up there, trust me, I follow the news every single day. So I'm going to be tracking them very closely to see what they come out with and say. But when price gets up there, what do you think they're going to be doing? Buying. So after a big significant drop like this, when price gets back down to $3,700, how do you convince people to still buy after they bought at 39 and 41? How do you convince them to still buy? There has to be some strong arguments for it. So could this guy be playing into that? I don't know. But it's interesting, right? That's a good point that you bring up there, Martin. Timing is a buy. Oh, to predict. Yeah, the timing, it all comes down to timing, obviously, right? But I think we're pretty good with the timing. I think we've been doing extremely well with the timing. Okay, like this whole scenario that's playing out right here, we called this before it happened. Okay, all this that's happening right here, ask any of our members and students. Okay, this move that's taking place, we called this before it happened. So we've been dead on with the timing. Okay, ladies and gents, that's a good little session that we had today, huh? Helpful? Any other last charts you guys want to take a look at before I let you guys go? It's a gorgeous weather outside today, so I'm going to get a chance to go out and take a dip in the pool. Anything? How's BlackRock doing? Still sitting at the lows at institutional demand. Okay. Yeah. Yeah. So there's going to be some upward pressure for sure. So it's in line with what we're seeing with the markets here. Berkshire. It could rally. Sure, no problem. Yeah. What else do we see here? Costco has been super strong. Have you seen that? Costco's been super strong. Amazing, amazing company. Once the market really kicks into gear after its drop and it settles down and it starts to rally, this will be one of the first companies I'll buy. All the strong companies I'll buy, but this one will be one of them. Walmart, big drop. Yeah, I was looking at Walmart yesterday. Walmart had a significant drop. Institutional demand is in play. Okay. But it's interesting where Walmart dropped from right here, because this was an area for selling right here. So it came into an area of selling and then price dropped. But institutional demand is in play. So this drop could have been just, you know, for the institutions to get into some more long positions. It's very possible. Anybody have any volume indicators to see the volume down here of buying? Anybody have that? I personally don't look at volume, but it'd be interesting. Indicators. Let's see, did I add it? Oh, look at that. Anybody familiar with this indicator? The volume indicator, red and green. What is that? Is that supposed to tell me something? Red and greens? Is just based on the candle, what color the candles were. It looks like that. Yeah. So big volume there. Big volume down there. So yeah, it could be the institutions buying down there. Could be. I don't know. We'll see. It's all about whether or not this range is going to hold as the market drops, because I do see the market dropping. So it comes down to, is this area going to hold as the market drops? If it does, believe you me, if it holds this area as the market drops, once the market finds that foundation and it starts to build up momentum, this will be a beautiful stock to buy. You know, aiming for $1.50 and then eventually higher. Initial targets would be about 145, 150, and aiming even higher. How do I get this? I want to get this off. There you go. Okay, Walmart, pound dollar. So pound dollar has been very weak. We've seen that clearly with the COT report data. The banks have been extremely weak. Price is stuck in a range on the monthly chart. So it's been somewhat unpredictable in terms of price action because of this range. Once this range breaks out and we get some proper structures either to the upside or downside, then this will be a lot more easier to read. But I personally wouldn't be trading pound. If I was to open up a position, okay, if somebody told me I had to open up a position on the pound, it would look something like where is it? Nope, that's not what I'm looking for. It would look something like this. There's my target, there's my stop loss, and I would be targeting a move like that. I think that would be the highest odds. Okay, that's what I would do if I had to trade it, but I don't have to trade it, so I stay away. Okay, so that's pretty much it. Okay, look at that strength in Walmart. Very good chance institutional buying, I'm telling you. Very good chance. Okay, ladies and gents, that was fun. Enjoy the rest of your day. I'm going to finish up some analysis here, and then I'm going to go ahead to the pool for a dip. Okay? Thanks. It was fun. Enjoy. I'll continue doing some analysis for you here with some tunes, and then I'll get back to my day. Take care, everyone.
After this night